Welcome to MoneyWeek's Roundup of the week's events. First proposed in the Conservatives' 2019 manifesto, the Renters Reform Bill will usher in some of the most significant changes to the private rental market in decades. It's a key piece of legislation for both renters and landlords. A cornerstone of the bill is the abolition of Section 21 of the 1988 Housing Act, which allows landlords to evict tenants without providing justification. Abolishing so-called no-fault Section 21 evictions will protect tenants from being thrown out of their homes through no fault of their own, something campaigners have long been asking for. If the bill makes it through Parliament in its current form, landlords will also be prevented from imposing blanket bans on tenants with pets, those on benefits, and those with children. The Telegraph has dubbed the bill the latest move in the buy-to-let crackdown, but that's not really the case. There are some positive changes for landlords as well. Evictions for antisocial or irresponsible behaviour will be expedited, and there's going to be new grounds for evicting tenants with persistent arrears. A new regulator will also be set up to settle disputes and relieve pressure on the court system. Landlords have repeatedly expressed their frustration at the slow pace of evicting bad tenants. Overall, the bill brings in some much needed and overdue change to the private rental sector. Everyone's talking about AI. ChatGPT has accelerated the growth of the sector as it's shown the world how the technology can revolutionise working practices. Investors have been rushing to buy any company with exposure to the sector, with AI-related stocks up 17% in 2023. But artificial intelligence cannot function without high levels of processing power, and this is where the best investment opportunities could lie. The biggest player in the sector is Nvidia, one of the world's most innovative chip designers. Its high-speed graphic chips have taken over from traditional computer processors, thanks to their ability to deal with vast volumes of data quickly. It's Nvidia's presence in this market that makes it so attractive. We are really only just starting to see the benefits of artificial intelligence. And as this technology becomes more mainstream, the demand for more advanced computer chips is going to explode. That's why the shares look so appealing. Analysts expect Nvidia's earnings to grow 30% a year for the next 3 years. There aren't many other companies in the world with this much potential. So while the stock might look expensive today, this innovative and dominant company offers unrivaled exposure to one of the most exciting technological revolutions in recent memory. Silver is a wonderfully versatile material. It's one of the world's best conductors of electricity and is ideally suited to coating components on circuit boards. That means demand is only likely to expand as the global technological revolution gathers pace. Silver is also used in the medical industry, water purification systems, and solar panels. According to the Silver Institute, demand for the precious metal hit a record high of 1.2 billion ounces in 2022. However, production of the metal fell slightly to 822 million ounces. This is where the opportunity lies. Demand for silver is expected to increase gradually over the next few years, but miners just can't increase output fast enough. Planning restrictions and environmental concerns are slowing down the process, and silver is getting harder to find, meaning miners have to dig deeper and spend more to get the same result. All of this implies a bright outlook for the precious metal. There are two ways to play this. Either buying silver directly via an ETF such as Wisdom Tree Physical Silver, or buying silver miners. A top option here is Hecla Mining, the largest primary US silver producer with a market share above 40%. Both are ways to build exposure to the booming silver market.